this is a day at the beach compared to what it felt like in 2008 when silver was pushed down from 21 down to 7.
So Dave, the some interesting news has shown up in the past 24 hours. I'm sharing this article on the screen. The Ukrainian central bank has sold 12 billion of its gold reserves during the war. And there's been some speculation as to what the purpose of this was and when it exactly happens. And I know you've been watching this closely, so clue us in. This is a new topic for me. What's going on with this?
Sure. So, and I actually, even though I'm on vacation up here in beautiful Steamboat, Colorado, I was exchanging emails with Chris Powell of GATA, who you guys know. In 2014, when the U.S. essentially overthrew the Ukrainian government and installed their puppet so that they could rape and pillage the country the way Russia was raping and pillaging it, there were reports that U.S. military transport planes were airlifting Ukraine's gold, like cleaned it out. This makes it sound like, it wasn't all of the Ukrainian gold reserves. Well, who really knows? All this stuff is opaque by design anyway. But so, and I'm positive, I'm 100% sure the U.S. military did that, because whenever they've gone into other countries to get rid of the guy running the country, we saw it with Libya, we saw it with Iraq,
right?
And the same thing would have happened in Syria if Russia and China didn't step in the way. Is the U.S. goes in there, they get rid of the guy running the country, put in their guy, and then they take the gold. And so my initial thought when I saw that news 8 years ago was that, yeah, of course the U.S. is taking it. They need that gold as part of their effort to manipulate and suppress the price of gold. And it's most powerful when you can take a bunch of gold bars and dump it on the LBMA all at once. The most famous being Brown's Bottom, when Gordon Brown, who was at the time the head of the Bank of England, dumped half of England's gold reserves right at the bottom of the market. In fact, he timed the bottom perfectly in 1999 and 2000. So my initial thought when I saw the news back in 2014 was, yeah, of course the U.S. is going to take Ukraine's gold and they're going to use it to manipulate the market. So fast forward 8 years later, and all of a sudden there's this news report out that Ukraine sold over $12 billion worth of its gold reserves to the U.S. And that was, in lieu of repaying cash for a lot of the money, which doesn't come close to how much money the U.S. has sent them in helping them fight Russia. But, it was repayment for war expenses that the U.S. has incurred. So the question is, it's not really clear what the nature of the actual transaction was, because the U.S. clearly, they took the gold 8 years ago. Now, did they take the bars and stick it in a Federal Reserve vault, either here or in London, or, like in an allocated account in London, or did they take the bars then and dump them? And are they going to, if they still have the bars, is now an ideal time? Because I think the precious metals market is percolating for a big move higher at some point. Are they going to withhold the bars if they haven't sold them yet and use them to manipulate dump on the market in the next couple months ahead of a Fed pivot, right? Because when the Fed pivots, they're going to want the price of gold to be as low as possible, because the price of gold is going to go to the moon when the Fed pivots again. My personal view is, and again, after hashing this out with Chris Powell, and he didn't definitively say what he thought, he was, probably, I'm sure he, just like I do, he thinks the bars were probably hypothecated and rehypothecated and, dumped a few times over on the LBMA. But I personally think this was probably nothing more than an accounting transaction.
So Dave, how does this all, everything you're seeing going on in the markets right now affecting gold and silver? I mean, everyone's kind of upset that gold's down in the lower 1700 area. Silver's below 19 now, in the 18 handle. What are you seeing right now, and what should the gold and silver investors be looking for?
Sure. Well, first of all, let me just say, if this doesn't get any more painful, and I'm not saying it won't, it certainly could. this doesn't get any more painful than it's been so far. This is a day at the beach compared to what it felt like in 2008 when silver was pushed down from 21 down to 7. So, and gold, I think, went from 1,800 to 7 or something like that. I forgot how high gold got back then. But so what we've been talking about in terms of the energy situation is going to ultimately translate in, it's going to hurt economic activity in the EU and ultimately here. And which means it's going to hurt the banking system there. And by definition, because we're all related, all the banks are related via derivatives, going to hurt the banking system here. So you're going to slow down economic activity. You're going to have a further recession in the amount of credit, because credit's been contracting, bank deposits have been contracting, and the banks are going to become even more liquid than they've already become. And this includes the US banks. So if you notice, over the last week and a half, the big banks have reported, and most of them have stopped their stock buybacks. Mm-hmm. And that's incredibly significant. I mean, that's like a sacred cow at these banks, because that's how the insiders keep the stock propped up so they can sell their compensation shares into a higher stock price. And I know JP Morgan, and there was a couple others who reported in the last week who suspended their buybacks. And so that tells you that these banks are feeling a liquidity pinch. And this whole energy situation that we've been talking about is going to intensify it. And at some point, the ECB and the Fed are going to have to pivot on their monetary policy and start printing a lot more money, or they're going to risk seeing some of these banks go insolvent. And the most likely candidates, and we discussed Deutsche Bank, but take a look at the graph, the price graph over the last year of Credit Suisse. Credit Suisse is like a $5 stock now.